What is up? What's up? What's up? What's up? What's up? I assume you guys are wondering what this is. If you guys don't know, this is the Fibonacci retracement. Now, I use this tool almost every single day, and I definitely use this tool most when I am doing my long-term investing, but I've used this strategy to generate over 5 figures in return in the past 2 years alone. Now, this has been with both day trading, meaning that I am in these positions for 5 to 10 to 20 to 30 minutes, and I've also used this on long-term trades, trades that I've been in now for over 2 years. So this is a strategy that I know and I have tested over time to see that this is able to work on multiple different time frames for multiple different overall strategies and goals for your portfolio. So without spoiling too much, we are going to dive into the Fibonacci retracement tool. We're going to talk a little bit about how to use it on the day trading side and also how to do it on the long-term side. And we'll also show you some live examples. I will show you guys some examples and some real trades that I have taken and alerted to our Discord. So you guys can even maybe go back. If you are in the Discord, you can go back and see why I alerted something, because I do believe once you do get the premise of this, it is very, very clear. Really quickly before we do jump into this video, I bought the whiteboard so we could do some more educational content. It'd be dope if y'all let me know what kind of educational content you want to see. That's really it. Like, subscribe, let's jump into it. Now let's go ahead and start breaking down what our Fibonacci retracement is. Now taking a look at the Fibonacci retracement, you are going to have these plot of points. Basically, it is a large math equation that no one actually knows what this math equation is, but at the end of the day, you keep seeing these sequences and you keep seeing these patterns, so it makes sense. Fair to say, no one knows what the hell it is. The big spirally Fibonacci symbol, no one knows what the fuck it is, but it works. So listen up. You're gonna have 0, and then you're gonna have 2, 3, 6, and 3, 8, 2. I'm telling you right now, you don't need those. You don't. You will need them for one scenario, and we'll talk about those later. But these two lines, or get rid of them. Get rid of them. Only have these bottom three. You're gonna want the 0.5, the 0.618, and the 0.786. I'll show you guys this in my settings once we do get over to the chart and whatnot. But the whole premise, the whole entire premise of the Fibonacci retracement is this right here. When you are day trading, when you are, long-term investing, whatever it is, you're looking for a discount, right? Okay, perfect. That is what we are doing here, okay? So what you are doing is you are measuring this move right here, this box move right here, you're measuring. I actually should use the red for this. This is the move that you're measuring right here. Wow, I just got these. I literally just got these. Anyways, whatever. That's for another topic. Now, you're measuring this move. So you're taking the low to the high of this move, okay? And then that is giving you this frame right here, and you're working off of that. You're looking for an entry on this pullback right here, okay? And the way that you find that entry, great question. You're looking in the golden zone. This is the golden zone right here. This zone right here, in between the 618 and the 5 right there. That is where you are looking for your entries. You're looking for a reversal out of here. Ideally, you get a fair value gap right here, you retest it, move on, or say, hey, I break out of here, I retest the fair value gap right on top of this, say this is orb. There could be a bunch of different confluences, but at the end of the day, you are looking for a reversal out of here. And this is just an indication that could be happening. This is not something that you're going to do on your own. But if you compare this with some ICT concepts, say, oh, we sweep these lows, boom, then we're moving back up out of the golden zone. Perfect. That is a model right there. We sweep these lows, right? We get a bullish fair value gap indicating a reversal. We're in the fair value gap, or sorry, we're in our golden zone indicating a reversal. What are we going to go do? Go chase liquidity up here. Very, 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 very simple. Okay. Now, when we're long term investing, it's just a little bit different. When you're long term investing, you're looking for a better discount, right? And you have more time. So you can start DCAing, and this is what I would recommend. This is what I do. When I'm doing long term investing, I'm looking here. Okay. I'm looking at this whole thing, and really, I am looking like at this line right here to start my main investing, and then everything here is just butter. That is where you make your money. That's why it's green. Fun fact. Now, we could also highlight this as something that you guys know, and you guys know very well. It's called the second wave retracement. Second wave retracement. When you see a reversal, right? I'll go show you guys a stock here soon, and there's a reversal. then they come back down to the second wave, and now they're about to have an explosive move higher. And I can show you guys another example where the same thing happened, and then it played out, and we are up, well over 200% on that position. So this is just a point to show you're looking for a discount, right? So you're looking for a discount. You don't want to be buying. Like, there's no point. I mean, if you're buying up here, you're an idiot. I mean, end of story. If you're buying right here, you just, you're not still watching this video. You would have clicked off by now. So we all have a competent brain, and we all know, logic at least. So that's good. But you're looking for the pullback of, at bare minimum, right here, this 0.5. Because at the end of the day, this is 50% of each of these. So if you're getting a pullback into premium, this means that you are getting a discount. You're getting a good premium. You've actually gotten a dip to the point where it's actually sizable enough to see possibly a reversal. A reversal, sorry. And if you're on an overall bullish trend, 9 times out of 10, you are going to see this continue. Of course, it's not going to be every single time. A little bit of spillage, that's cool. But at the end of the day, that is why you pair it with other confluences. So, if I see something like this where we do once again come back down, we make a fair value gap, right? And then we retest that fair value gap. By the way, we all know that if we have a fair value gap like that and we come back up and retest it, that's a bullish retest. So if you're doing that outside of this, where you are actually reversing, showing that realistically back here, you probably saw something like this, a fair value gap that you rejected off of and continued down. Now it's showing a change in trend, and you can actually push the price back upwards. So this, at the end of the day, is going to be what you're looking at. Just remember that this is what you're looking at for day trades, this zone right here, and you're looking for a strong reversal out of that. For long terms, as long as your company is a strong company, of course, this doesn't work out if you pick a horrible company. This isn't going to work on penny stocks. This isn't going to work on meme coins. But this is going to work if your company is financially stable, and you can actually draw out a nice trend where you do see an impulse move up. Then you can retest down into your golden zone and then down into your second wave. And you know that anything below either one of these three lines is going to be a good discount on the stock that you are looking to own for a long time and you believe will go higher because you have done your financial research and understand that this is a strong company that is set to grow in the future. Now, let's go ahead and jump over the chart, talk about some of these possible examples as well. Now, before I show you guys some real world examples, let's go ahead and draw that out one more time. So you're seeing a large impulse move up, whatever that looks like, it doesn't really matter. And then you want to see a pullback down. That would probably be our golden zone right here. And this is probably our 1.5. Then you're looking for a move out of it. So you're really playing the reversal overall. So you see a move like this, right? Obviously, you don't see it until, this point right here where my yellow line is. You're looking right then and you're saying, oh, okay, like I'm waiting because I didn't catch the top of this move, or maybe you are taking that move down into the golden zone. So you can place a lot of different ways. I've played it from the top down into the golden zone, or from the golden zone out and up to back up for the reversal. So you can follow either side here. I will say it is much less risky if you wait and then try and play the reversal out of the golden zone because you have a bullish bounce. But calling top is a lot harder. So that is what I'm getting at there. But what you're going to do is you're going to draw your mark from the low to the high right here. And you can see I'm a goat right there. So that is our golden zone. This is our golden zone right here. This zone right here. Bang. Right? And then right here, this is your wave 2. So this is your long-term wave 2. So that is what it should look like. Okay, and you're looking for entries under this line. This is where you'd start your DCAing, right? For long terms. This is where you DCA. And then here would be your, I'm selling my arm, I'm selling my leg, I'm selling some, stuff I shouldn't be selling, right? On the black market on a Tuesday afternoon on, Facebook Marketplace to a 38-year-old single woman. But at the end of the day, we got to do what we got to do. And that's what you're doing when you're playing this reversal. So, got to get the job done. Okay, it is clear I have to say this very slow. Let me show you some real world examples. Damn tongue twister, bro. I filmed that same segment 27 times. But basically, here is Nebius. This is a stock that we are holding for the long term, and we have just gotten good entries on. Now, of course, we didn't get full entries because, as you can see, it didn't pull down into our zone. But as you can see, it did pull down into our DCA zone where we were able to get our first buys right here. I'm going to label this a bullish fair value gap, but just say it's the, golden zone right there. And then also we have, our load the boat zone. But we aren't there yet. So right now we're not there yet, but that is fine. We got our entries and we are already up over $500 on our small position right now. Oh no, I only made $500. Like, for that to be the worst, that's totally fine with me. And at the end of the day, we still got entries. So if this thing runs, we're cooking. Also here we have Zeta. So I want to talk about Zeta because this is a great one. Okay, so we draw it from the low of this move all the way to the high of this move. You can see it comes down into this 786. It honestly loses it for just a second, but looking on the weekly here, this is where your confluence pairs, and you see that we are coming into the 200 EMA. So boom, 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 boom. Now we have an actual idea, right? Bang. Then we are able to measure the next move, and this is another great move right here from this low, right here. And then look, macro second wave, right? Macro second wave, and then boom, move, micro second wave right here. I know it's got to be clicking. It's got to be clicking. I'm telling y'all, this is the move, bro. This is the move. See, look, second wave again. Bang. What do we do? Move off of it. What do we do back here? Move off of it. Yes, this one pulls down to the golden zone, but look, once again, because this is a strong company that is growing year over year in free cash flow, revenue, EPS, everything that you could possibly want, then that means even though, hey, we did below, our 786 a little bit, that means I was able to get a better price. Once again, oh man, you're telling me I was able to buy this stock that's definitely inevitably going to go higher over the next couple of years because of their great growth and their success, and I get to buy it cheaper? Like that is the move. You're getting your discount, okay? And even here, you still got a discount, dude. I was buying back here even after this main move, okay? Because that's the reversal, and now you're playing the safety move because now you're not fighting the trend, you're starting the trend. I mean, you're starting the trend now, and you can see what it has done since, we have entered back at 1592, which is our average price. And our average price is, look, bingo, bingo. Where's that? Bingo, right? Of course, we were getting entries back here, but this is where we bring our average price up to, right? So to prove that we were buying back here, right? Then we pull up our average price right into our buy zone. So guess what? If we come back down again, there is no stress for us. Yes, we lose our profits for the time being, but at the end of the day, we're not in any drawdown, and we can go ahead and DCA back into this position, get a really good average on that, so on and so forth. Now, I know all of you guys have been waiting 7 minutes of your entire life for this, and you guys are all saying, show me how to use it for day trading. I'm trying to be a millionaire in day trade like TJR. Okay. So this is what you're going to do. The same fucking thing. The same goddamn thing. And it is so easy to set up your risk to reward too. So here's a move that I took, and I actually took this alert on futures with silver here. And I honestly will say that I do definitely like futures more when I am trading now. And with Fibonacci retracement, it is much more technical. So if you ever are looking for it, use code BULLISHBUZZ in all caps on Apex and get 30% off. So just saying, I do like the futures more. It's much more technical. Now, here we are pulling back into our golden zone, which is where bing, 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 right there. And guess what? We are getting our entries right there. Sometimes I will even do limit orders. There's a lot of times where you'll see a scenario where you break above orb, come back down, and then orb high lines up with the golden zone. That is a great spot to take quick scalps. And I do that almost every single day. A lot of times it happens on silver. A lot of the times it will happen on M and Q. Normally it will happen on one or the other. So I'm always looking at both. But what we are getting at here is we get this entry right here. And then look, close your eyes, right? And remember what I was talking about with that fair value gap? Guess what? Fair value gap, retest, bullish confirmation, and we continue higher. And then guess what? Why do we get out of this trade? Of course, we're taking trends, right? But then we get a bullish fair value gap that is inversed. So that's when we know to get out of this trade. And you should have definitely been taking trims up to this point. And we were. We took trims, and our target was this fair value gap right here, which we do inverse. So we get what we want, and the market gets what they want. So boom, 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 boom. This is the easiest strategy of all time. And I just taught it to you guys in 8 minutes. So you're welcome. Now let's wrap it up by clearing up everything that we have just talked about, okay? What you are looking at, once again, is you are measuring the main move. This can also work completely upside down. You would just do everything that I said upside down, okay? Instead of measuring the move like this, you would obviously measure the move like this, okay, right? Yo, get up here, camera. What you looking at, buddy? Stop looking down there, freak. But you're looking for a pullback into the premium, which the premium would be highlighted at this point of you're in 50% or more of this drawdown, meaning that you're getting a discount. I'm shaking the table now. And this is your golden zone right here. Golden zone. Okay. All right. Here is your wave two, right? Wave two. Okay. You can even go like this. Wave two. It's beautiful. Okay. So you are looking for a pullback in a premium right there because you want to get the best price on these shares as you possibly can. And you know that the company that you're buying is a good company and they have strong financials, meaning that they should climb out of this dip. So this means that it's a good buying opportunity to you. And at the end of the day, once you figure this out, you're going to be like, holy, That's what logic is, bro. Oh my god, bro. Like, and then, then you're gonna dap me up over DMs and we're gonna be boys and it's chill. But that's the Fibonacci retracement, bro. It's easy. It can be used on any single time frame. That's really it, bro. I mean, I want to over explain it, and I feel like I have, but it's just that simple. I could have explained it in 4 minutes if I wanted to. I could have explained it to your baby brother, bro. I don't know. But that is Fibonacci retracements. That is all I have in today's video. I know I absolutely rambled, but I'm going to start to try and figure this out a little bit. I got to ramble to start to know what I'm talking about. That's the way my brain works. But let me know in the comments down below what you guys want to see next for educational content. I honestly did have some fun doing that. So I'm going to go edit this video. We'll see what the time is taken on this. Let me know in the comments down below and I'd be happy to make some more. But let me know in the comments down below. And then let me know in the comments down below. And yeah, let me know in the comments down below.